The S Corp election is probably most commonly known for helping businesses or small business owners save money on their taxes, specifically self-employment taxes. And here's how that works. When you do an S Corp election, you have to become a W-2 employee of your own business and put yourself on payroll. You're required to pay yourself a reasonable wage, although that's not a clearly defined number. You can check with your CPA or accountant to help you figure out what that number should be. Once you do that, the distributions that you take above and beyond your W-2 income will not be subject to self-employment tax, which is 15.3%. So if you make $100,000 a year and you split that into $50,000 of W-2 wages and $50,000 of distributions, then you will save 15.3% on the $50,000 of distributions. Keep in mind that the S Corp election is not right for everyone. Although there definitely are tax benefits, it only works if your business makes enough money to pay yourself as a W-2 employee with that reasonable wage and still have net income left over for distributions. Otherwise, you're not getting the benefits of the S Corp election. The S Corp election also has a lot of requirements, one of which is setting up and running payroll, but there are other requirements as well that you should be aware of. So make sure you check out what all you're required to do with that S Corp election. We sometimes see business owners tell us we can't process payroll because our business isn't making any money. We had a negative net last year, or maybe we have a negative net this year. For those business owners, probably the S Corp election wasn't the right choice or wasn't the right choice yet. So it may sound enticing to go out and do the S Corp election, but keep in mind you do have to have sufficient income so that you can pay yourself the reasonable wage and still have net distributions left over where you have that tax savings. Also keep in mind that if the IRS audits you and they don't feel that you paid yourself a reasonable W-2 wage, they can reclassify some or all of your distributions as W-2 wages. So at the end of the day, you want to be pretty honest and make sure that you are setting up a reasonable wage that you could defend in the event of an audit to avoid the IRS reclassing some of those distributions as W-2 wages. Also, just to keep in mind, as a W-2 employee, you have to have all the things that other employees have, which would be state tax accounts. You usually don't need workers' comp, but you have to have your withholding and unemployment tax accounts, and you have to set up payroll. So you're going to have some sort of process within your business. Now, if you already have employees on payroll, it's pretty simple to add yourself. But if you're the only person working in your business, then it can be a bit of an undertaking to get payroll set up and get that started. If you have any questions at all about being an S Corp owner, setting up payroll for the first time, or what those taxes might look like based on a certain amount of income, we'd be happy to help. Feel free to drop a comment below, or you can find us online at ValorPayrollSolutions.com.